So Gesner, I work with a lot of buyers that are buying their first home, and I have seen that they get pre-approved sometimes. We start looking at houses and the rates go up and they freak out. They tell me maybe I should wait until they go down again. What options do they have with you?
Well, this is something that actually happens quite often, right? So you have a lot of people out there looking for homes. They're all excited. They find the perfect home, and then boom, rate just went up a little bit, right? Now, what people need to understand is that rates itself, right? So when you look at a 6% or 6.25% interest rate, the rate doesn't actually change. It's the cost for the rate, right? That change on a daily basis and sometimes multiple times a day, right? Depending on the lender. But it pretty much is what the market is doing, right? So that's what would cause the price to change. So for a client that's shopping, right, we want to make sure that they have full confidence that if they find a house, that we can still help them get that house with a payment similar or exactly the payment that they can afford, right? So affordability is a very important thing. So when for a client that's out there shopping and we change on them, we have tools that they can use once we're on the contract. We can do a permanent buy down. That's where we can use extra funds, rather if it's a seller's concession or maybe a credit that we're giving the client to buy the rate down so they can get the payment that they desire.
For the entire loan?
For the entire loan. Or we can use a tool called a 3-2-1 buy down.
I heard about that.
You heard about that, right? So that's a temporary buy down where the first 3 years, the payment will go lower for the client. So the first year, it's going to be 3% less than the original interest rate.
Which is incredible.
It's great, right? The second year, 2% less, and the final year, 1% less. And of course, fourth year, just go back to the qualifying interest rate. Well, what we want to do is educate the client to understand that the goal is not to stay in that temporary buy down for 4 years or 3 years. What we want to do is within the first 3 years is to help them refinance into a more permanent interest rate, especially in this environment where we're expecting interest rates to go down, right? So ultimately, our goal is to make sure that our client and our realtor partners go out there, shop with confidence, knowing that by the time they are under contract, that we have a solution to make sure that they stay within the payment that they're comfortable with. Because this, at the end of the day, buying a home, it's not a short-term deal, it's a long-term deal.
Very long,
right? So that's the way we would address that.
And also, there's times that after we are under contract, either the appraisal comes really low,
right,
or sometimes the inspection reveals that the house needs big repairs. For example, I do business in Margate, a community in Coral Bay, where the houses were built in the 90s, early 90s,
right,
and I have seen in inspections that the inspector says this house needs a new roof. And that's an expense like $30,000.
Right.
Is there any tools that you have for the buyers to help us get over a low appraisal or an inspection that needs a new roof?
Sure. Now, you do have several different tools, right, that can help a client, fight an appraisal, right? So first, it gives you a great opportunity as a realtor, right? If the appraisal come in lower, typically that's an indication that maybe the listing price or the agreed purchase amount is not supported by the community, right? Or the area or the market where they're buying, right? And that happens, right? So a lot of sellers are maybe a little bit more zealous, right? Where they want to go and trying to find the highest possible price for their home, but the market don't fully support that. So that's what the appraisal would actually reflect. However, there are times where the appraiser maybe won't, right? So in a situation like that, what we'll have is we have what's called a reconsideration of value, right? So that's when we would get comps that are better than the one that the appraiser uses in the report. And then we'll say, hey, the comps that you're using are not truly, a reflection of this community, but we have better comps that we can provide you that would help you make a better decision. Usually that would help raise the value of the home. So those reconsideration actually happens more often than people think, right? Where the appraiser go back and reevaluate the opinion and increase the value. That's not always the case because appraisers, obviously, they want to protect the integrity of their report, right? But when it's necessary, we can use those tools. In addition to that, I think it gives you an opportunity as a realtor where you can negotiate with the seller, where the seller can perhaps bring down the price of the home, and maybe the buyer can probably increase the amount that they bring into the table so they can meet each other in the middle. The goal is to never lose a deal because of an appraised value, right? So we want to do everything we can to make sure that the client win that opportunity at the end. Now, in terms of the inspection, right? Now, lenders don't truly deal with inspection unless we're talking about a VA loan, right? Most of the time. Sometimes FHA, right? Now, when the inspection report comes out, that's a great opportunity for you guys to go back and renegotiate.
Exactly.
Right?
Yes.
So
Credits or a
absolutely.
brand new roof. But is there any tools that you guys can help us with?
Yeah, so there are times where we can use lender credit, right? That the client can use. They can allocate that towards closing costs and use their own funds for repair if
Okay.
necessary. Or there are other type of loans like a 203K, for example, that allows someone to purchase a home and do repair, and we give them some of the funds that's needed for that repair.
Okay.
Or we have a home style renovation loan that's a conventional product that we can use also to help the person with major repairs that are needed for a home. So yes, there are plenty of tools that can be used to help someone get into a home, help repair some of the major stuff that needs to be done. But ultimately, we want to make sure the person understand we are here to help them get into a home and have a long-term opportunity to build memories with their families.
And equity, of course.
And of course, equity, build wealth.
Wow, that was great because I really thought that lenders only help during appraisals. I didn't know that you can help us if we have an issue with inspection. So that was great. I appreciate that.
Of course, absolutely.
One last scenario that
Sure.
I have in mind. We also have clients that want to sell their property and want to buy at the same time, the same day. But they always tell me, what if something happens? What if I don't have the money to close? And how can we help them be confident about the transaction where they're going to sell a house and buy a house the same day?
Sure. Yeah, it's incredible. In fact, we're seeing a whole lot of that happening right now. A lot of folks are willing to move, right, from their current home, finding different opportunities, whether that's buying up or downsizing because due to family situation.
Exactly.
But a lot of the clients that we're seeing right now, the home that they currently have, they're sitting on those homes and they have opportunities that's right away that they want to tap into, right? So two very important tools to keep in mind. One is a HELOC, right? So the client can take a HELOC on the existing home, right? And use that to purchase the new home.
But that's only on the equity, right? So they have to have equity.
They have to have equity. So for a lot of the folks that have purchased over the years, and we understand after 2020, 2023 pretty much is when rates started going up, but home value has really almost doubled over that time frame, right? So a lot of people do have a lot of equity in their home that they can leverage to purchase the next home. So that's one tool that we can use. Another tool that we use quite often is what's called a bridge loan. And that's a great option for someone perhaps that don't have a ton of equity, right? But may have some equity nonetheless, or they have a lot of equity, right? But the bridge loan would allow them to purchase their new home without having to stress over the current home, right? Because it would give them space, usually 6 months, right? Where it's no payments, right? Where they can use the bridge loan option to purchase the new home. There's no payment on the current home that give them freedom, and we don't have to count that against their debt to income ratio, right? And in some cases, some of the bridge loan option, they would actually purchase the home after the 6-month period, right? But we're talking about 6 months here in South Florida. Everybody want to move to South Florida, so eventually someone's going to purchase that existing home within those 6 months.
One thing that you mentioned about the bridge loan that I have not heard before is that you said on their current home, they're not going to have payment for 6 months. How do you make that happen?
So the bridge loan works this way. The lender would typically charge a fee, right? It's usually a certain percentage for the service of providing the bridge loan. And you would also take a couple months, usually 6 months of PITI, set that aside. The rest of the process would just be that there's no payment. But that payment is collected up front with the bridge loan fee, right? The borrower in this instance would not have to physically send a payment to their mortgage company, the current mortgage company, because that's already allocated for. So the advantage here, we take the debt load off their debt to income ratio, and we just focus on the new loan that they're going to get for the property that they're buying. Now, again, we're in South Florida. So if we're talking about 6 months for a bridge loan and for you to sell the house, typically that house is going to be sold within those first 6 months, right?
Of course.
But if not, this bridge loan option would also come with an option to purchase it. So then the borrower really can feel a sense of freedom, less stress moving into the new home, because they know if something were to happen, they didn't sell it in 6 months, the bridge loan company would purchase the home from them. So it's a great product. It gives people an opportunity to move up or down, right? Without the stress of worrying about, well, what's going to happen?
What if it doesn't sell?
Exactly. Right. So it's a great product. If you have a client that has a bridge loan that they're looking at, exploring, we are happy to explore that with them and give
Definitely,
them some options.
I'll be in touch for sure.
Sounds good. Gonzalo, it's always a pleasure seeing you.
Pleasure to see you.
Absolutely.